If you're currently holding silver positions, what I'm about to tell you in the next few minutes could be the difference between protecting your wealth and watching another catastrophic 50% crash destroy your portfolio. And you cannot afford to ignore this warning. Tuesday, February 11th, 2026, New York time. Please share in the comments what day and date you're watching this from. I genuinely appreciate seeing how far this message reaches. Before we begin, a quick note. I'm currently working to reduce copycat channels that mirror this content. If you find value in what I'm building here, the best way to support this effort is simply by subscribing and leaving the name George Williams in the comments. It may seem small, but it truly makes a meaningful difference. Now I need you to pay very close attention to what I'm about to say because this is critical. Silver is trading at $84.72 per ounce right now, up nearly 5% today, and I know many of you are breathing a sigh of relief thinking the worst is over. But here's what you need to understand. That January crash that wiped out 50% of silver's value in a matter of days wasn't just a one-time event. It was a canary in the coal mine, a warning shot that revealed just how fragile and vulnerable this market really is. And if you're not prepared for what could happen next, you could lose everything you've gained from that incredible 162% rally over the past year. Let me be absolutely clear about something. I'm not here to create panic. I'm not here to tell you to sell everything and run for the hills. But I am here to make sure you understand the very real risks you're facing right now, because I've watched too many people lose too much money by ignoring warning signs that were staring them right in the face. On January 29th, silver hit its all-time high. Traders were celebrating. People were posting screenshots of their profits on social media. Some were already planning what they'd do with their winnings. Then January 30th happened. The LBMA silver price recorded its largest single-day drop in history. Not one of the largest ever recorded. Think about what that means. In over a century of silver trading, that single day stands out as the most catastrophic. What caused it? The CME raised margin requirements from 11% to 15%. Just 4 percentage points. That's all it took to trigger a cascade of forced liquidations that sent silver plummeting 50% from its peak. U.S. Treasury Secretary Scott Bessent publicly blamed Chinese traders for the extreme volatility, pointing to massive speculative positions that were over-leveraged and fragile. When those positions had to be closed, the market couldn't handle the selling pressure. It collapsed. And here's the terrifying part. Nothing has fundamentally changed since then. The same leverage is still in the system. The same speculative money is still looking for opportunities. The same structural vulnerabilities that caused that crash are still present in this market right now. You're looking at today's price of $84.72 and thinking it's recovered nicely from the lows. It's up 5% today. Maybe you're thinking about buying more to average down your losses if you bought near the top. Maybe you're thinking about holding on because surely it'll get back to $100 soon. After all, UBS is forecasting silver will return to 100 by next month, right? But let me ask you something. Can you afford to be wrong? Can you afford to experience another 50% crash? Because the warning signs are flashing red right now, and if you ignore them, you're gambling with money you might not be able to afford to lose. Let's talk about the warning signs you absolutely cannot ignore. First, we have the Chinese Lunar New Year coming up from February 16th through the 23rd. This is less than a week away. During this period, Chinese trading activity drops dramatically. Now, normally that might not matter much, but remember what happened in January. Chinese traders were blamed for causing the crash. If those same traders are about to step away from the market for over a week, what happens to liquidity? When liquidity dries up, volatility explodes. Price swings become more violent. It takes less volume to move the market dramatically in either direction. If you're holding leveraged positions going into the Lunar New Year, you're playing with fire. Second warning sign, industrial demand is declining. The forecast shows a 2% drop in industrial fabrication for 2026, down to around 650 million ounces. The photovoltaic sector, which has been a huge consumer of silver, is experiencing serious weakness as manufacturers work to reduce silver content and find cheaper substitutes. Now, bulls will tell you that data centers and AI and electric vehicles will make up the difference. Maybe they will, but maybe they won't. And with over 50% of silver demand tied to industrial applications, if we hit an economic recession, that demand could fall off a cliff. When industrial demand weakens and speculative money pulls back at the same time, what supports the price? This is critical to understand. Third warning sign, the Federal Reserve. Markets are pricing in 60 basis points of rate cuts by year-end. That's been supporting precious metals, including silver. But what if the Fed doesn't cut as much as expected? What if inflation proves stickier than anticipated and they have to hold rates higher for longer? The moment those rate cut expectations start to reverse, you're going to see money flow out of precious metals. The dollar will strengthen, real yields will rise, and silver, which has been benefiting from the expectation of easier monetary policy, will get hammered. Let me talk about technical levels because this is where things get really important for anyone holding silver right now. $80 is your first critical support level. If silver breaks below 80 and stays there, that's telling you the recovery is failing. It means the bounce from the lows was indeed just a dead cat bounce, and the next leg down is beginning. $75 is your red alert level. If we get to 75, you're looking at a market that's broken down completely from a technical perspective. All the gains from 2026 would be gone. You'd be back to late 2025 prices. And if we hit $70, that's disaster zone territory. That would represent a complete unwinding of the rally, a rejection of higher prices, and potentially the start of a multi-year bear market in silver. Now I know what some of you are thinking. You're thinking about the supply deficit. 67 million ounces in the 6th consecutive year. That's a real fundamental support, right? The world is consuming more silver than it's mining. Eventually, that has to push prices higher. And you're not wrong about the fundamental case. But here's what you need to understand. In the short to medium term, markets don't always trade on fundamentals. They trade on sentiment, on liquidity, on positioning, on momentum. Fundamentals matter in the long run, but in the short run, you can get crushed even if you're fundamentally right. Just ask anyone who bought silver at $100 in January thinking the fundamentals justified it. They're sitting on 40+% losses right now. Let me walk you through 3 scenarios for what could happen next, and I need you to think honestly about which one you're prepared for. The worst-case scenario involves a perfect storm of negative catalysts. The Lunar New Year drains liquidity from the market. While Chinese traders are away, someone dumps a large position. With thin markets, it gaps down violently. That triggers stop losses and margin calls. The CME sees the volatility and raises margin requirements again to protect the clearinghouse. More forced selling ensues. The Fed comes out and pushes back against rate cut expectations, saying the economy is stronger than thought. The dollar rallies. Silver breaks 80, then 75, then makes a run at 70. In this scenario, if you're holding from current levels, you're looking at another 30 to 40% loss on top of whatever you've already experienced. That's the nightmare scenario. And while it's not the most likely outcome, it's absolutely possible. The base case scenario is probably more realistic but still challenging. Silver chops around between 75 and 95 for months. It's volatile, stressful, and difficult to trade. You get fake breakouts that fail. You get fake breakdowns that reverse. Traders on both sides get whipsawed and lose money. The market is essentially digesting the trauma of the January crash and trying to figure out what fair value actually is. In this scenario, holding is frustrating but not catastrophic. You don't make new lows, but you don't make new highs either. You're stuck in purgatory, and your capital is tied up in a position that's not working while other opportunities pass you by. The best case scenario has silver consolidating for a few more weeks, building a solid base between 80 and 90, then resuming its uptrend as the UBS forecast suggests. It gets back to 100 by March, holds above it this time, and gradually grinds higher through the year. But even in this best case, you need to understand the risks. The path won't be smooth. There will be pullbacks that test your conviction, and the memory of the January crash will hang over the market like a dark cloud, making everyone nervous at every sign of weakness. So what do you actually do right now if you're holding silver? Here's my honest guidance, and this is critical. First, if you're using leverage, reduce it immediately. Like today, right now. This is not a market for maximum leverage. The volatility is too extreme. The risk of another margin requirement increase is too real. If you're trading on 15% margin, you could get wiped out by a 20% move. That's not theoretical. We just saw it happen to thousands of traders in January. Second, implement stop losses if you don't have them already. Decide right now at what price you're wrong about this trade. For many holders, $80 should be that line in the sand. If we break 80 convincingly and stay below it, the technical picture has deteriorated and you should consider exiting. $75 should be an absolute emergency exit for anyone who didn't get out at 80. I know stop losses can feel like admitting defeat, but they're actually about protecting yourself from catastrophic loss. Better to take a 15% loss and preserve your capital than to hold for pride and take a 50% loss. Third, if you're sitting on profits from the larger trend, this is the time to seriously consider taking some off the table. Silver is up 162% from a year ago. If you bought down in the 30s or 40s, you're still massively ahead even after the crash. There's an old trading saying, you never go broke taking profits. Lock in some of those gains, reduce your position size, let the house money ride if you want, but protect your principal. The markets will always give you another opportunity to get back in if you miss a move. What they won't give you is a do-over if you lose all your capital. Fourth, pay extremely close attention to the key dates and events in the next 30 days. The Lunar New Year period from February 16th through 23rd is your immediate risk window. If we're going to see another liquidity-driven volatility spike, that's when it's most likely. Watch for any Fed communications or economic data releases that could shift rate expectations. The next jobs report, the next inflation data, any speeches from Fed officials. These can move the entire precious metals complex dramatically. Monitor the CME's announcements. If you see any indication they're considering another margin requirement change, that's your signal to reduce risk immediately. The warning signs that would tell you to get out now, today, no questions asked, would be things like silver breaking below $80 on heavy volume, the CME announcing another margin increase, the Fed turning unexpectedly hawkish and pushing back hard on rate cuts, or a major geopolitical de-escalation that removes safe haven demand. Any of these would be red flags that the environment has turned decisively negative. Conversely, the signs that would indicate it's safe to hold would include silver reclaiming and holding $100, mining stocks starting to outperform the metal itself showing sector confidence, physical premiums expanding showing tight supply in the actual metal, and the Fed confirming rate cuts are coming. If you see these signals, the bullish case is intact and holding makes sense. Here's the hardest truth I need to tell you. Many silver holders right now are trapped in the psychological prison of waiting to get back to $100. They bought at 90, 95, even at the peak above 100. They're underwater, and they've convinced themselves they just need to hold until it gets back there, and they can get out break even. This is one of the most dangerous mindsets in trading. Markets don't care what price you bought at. They don't owe you anything. They don't have to go back to 100 just because that's what you need to break even. This kind of thinking keeps people in bad positions far longer than they should be, turning manageable losses into devastating ones. If this video has made you realize you need to reassess your silver positions, if you're seeing the warning signs now that you couldn't see before, if this potentially just saved you from another catastrophic loss, I need you to hit that like button right now. And you need to subscribe to this channel immediately, because the next few weeks are going to be critical for silver, and I'll be here every step of the way helping you navigate this treacherous market. Drop a comment below telling me, are you holding your silver, selling some, or actually buying more at these levels? What's your game plan? And remember, leave the name George Williams in your comment to support this channel against the copycats. In my next video, I'm going to walk you through specific emergency trading strategies for volatile markets like this, including exactly how to set stop losses, how to use options to protect positions, and how to position size properly when volatility is through the roof. You cannot afford to miss it. Until then, stay safe, protect your capital, and remember that preservation of wealth is more important than chasing gains. I'll see you in the next one.